Hey, Alison, how are you today?
Hey Chris, I'm doing very well. How are you doing?
Yeah, I'm great, thanks. I'm great. So we recorded a podcast about position trading recently. So we thought we'd do a short explainer video as a follow-up, and just let people know what's required and what it is and how it works. It's part of our series that we've done on trading styles. So we first did scalping, and then we did day trading. And position trading is quite different. So we're going to have a quick chat about it.
Yeah, I would say positional trading is probably more akin to traditional investing in many ways.
Yeah, it is. It is. Day traders and scalpers, they're more reliant on short-term price movements, in intraday stuff. Whereas, and they spend a lot of time looking at technical charts, and position traders are more interested in fundamental analysis, and long-term trends, historical trends. Position trading, it's more resembles investing, like investing in stocks and shares, buy and hold investing. The two crucial differences are that when you're actually buying stocks and shares, you can only take a long position. You can only buy the stocks and shares. Where position traders in CFD trading can go long and short. So you can short a stock, or you can short shares, or you can short commodities, or you can short Forex pairs. The second difference between position trading and investing is that you never actually own the asset. This is still CFD trading. So you're never actually owning the underlying asset, and you're working with a CFD broker. And it's to be quite clear at the top. This is not investing, even though it resembles investing.
So, if we had to describe what a positional trader looks like, as you said, Chris, they're less concerned with short-term fluctuations, and unless the fluctuations impact the long-term outlook of that position. And as you
Mm-hmm.
said, there are trend followers. So position traders don't often trade actively like the scalpers or day traders, and they use a combination of technical and fundamental analysis when making their decisions. But they also take into consideration other factors like market trends and historical patterns, of course. So they've got a much sort of broader view of the market.
Mm-hmm.
And good positional traders are essentially those that can identify the right entry and exit points. So both entry and exit are important. And they also know where to place their stop loss order or their trailing stop loss order. Yeah. So that's sort of
Yeah.
a summation of what a positional trader looks like.
Yeah, exactly. Those stop loss orders are really important for position trading, because you're going to be holding on to something for a long time, and you need to think about it. But we'll get to that. We'll get to that a little bit later on. But so, what are the most popular assets for position trading? Because position traders, they're looking to profit from long-term price movements here. You're talking weeks, months, sometimes even years. So they're much more interested in markets that have very well-defined trends, so more stable markets with narrow price ranges. So they're not looking at markets that have high volatility or really wide trading ranges. So some of the most popular markets are stocks and shares, to explain, because it's quite similar to investing in that way. Commodities are another good one, and indices as well. I mean, company shares are good because these asset classes of shares, they're much more stable. You have a lot of information, a lot of fundamental analysis information. I mean, companies have to release earnings reports, and you can dig through the numbers, and you can make a fairly accurate prediction of what's going to happen to company shares over the next 12 months. And with some kind of, and so that you get some kind of stability there. Commodity trading, like stocks, commodities are very closely related to long-term trends. As we're seeing right now, you look at anything like oil price, gold price, there's a long-term trend happening there that you can take advantage of. And then indices. I mean, famously, there's a lot of index trackers out there now. A lot of people have put their pensions into it. They're very stable over the long term. And so like the NASDAQ or the S&P 500 or the FTSE 100 in London, these are large groups of companies that are based either in the same geographical area or they belong to the same commercial industry. And that gives you, because there's such a broad range of companies in one index, you get a lot of stability there.
Yeah. Yeah, absolutely. And then another instrument that's obviously famous for positional trading is Forex. While the minor and exotic pairs are probably less favored by position traders, obviously because of their volatility and their sometimes lack of liquidity, and also because of their, they've got sort of higher trading costs. The majors often present very good sort of positional trading opportunities. For example, the strength of the USD over the last 10 months.
Yep.
But things like cryptocurrencies are often not a favorite for positional traders. As you've seen what's happened if you knew Bitcoin was going to sort of lose as much as it has over the last few months, it might have been a good position opportunity. But generally, cryptos are very volatile assets. So the positional traders tend to stay away from them.
Yeah, and the crypto market's untethered from any kind of fundamental analysis. I mean, it's
Yeah.
not based on anything. It's just
Yeah.
based on, fear and greed. So it's much for technical opportunities. It's fantastic for, as you said, like scalpers and day traders. But yeah, it's really difficult to make any kind of fundamental decision making
Mm.
about where crypto is going to go over the next 12 months.
Yeah, it's almost an asset where you have to keep your eye on the ball, almost 24/7, because it is a
Yeah, exactly.
24/7
It is.
market. Yeah.
Yeah, exactly. And that's kind of the point of the position trading, is that you don't want to keep your eye on the ball
Yeah.
24/7. It's not good for. Well, I mean, yeah, as you said, if you made the right guess, but I mean, position trading isn't about guessing. Trading isn't about guessing. So yeah, unlikely that many position traders are going to move into crypto. But there's a couple of strategies and indicators I want to talk about for position trading. I mean, the most common strategy for position traders is trading the breakout. So this is the start of a trend, and this you're going to spend a lot of time. Position traders will spend a lot of time looking for the starts of a trend, and this requires some intuitive leaps. It requires good fundamental knowledge, and it requires watching the markets. So, for instance, the start of the Ukraine-Russian war, and even a little bit before that, the beginning of the tightening with raising interest rates by the Fed in the United States. This is a lot of position traders would have seen this and gone like, okay, what we're going to see here is a strengthening of the US dollar over a long time period, and that's a really good example of a breakout. And one of my friends, actually, another good example is she at the start of the pandemic. She moved heavily into Zoom shares. And that's the kind of intuitively I'm talking about, her understanding that, oh, wow, everybody's going to move to remote working. So companies like Zoom, which facilitate remote working, are going to be incredibly popular. And she made a killing off it. And this is the kind of stuff you've got to look for. So some breakouts are more obvious, some of them less obvious. But this is what position traders are going to look for.
So, as you've just mentioned, Chris, you use fundamental analysis for the most part to decide on your position, but technical indicators also come into it. Some examples of popular indicators that positional traders use are the moving average over 50 days, and then they also use the 100-day indicator and the 200 moving average, because they obviously indicate significant long-term trends.
Yeah, exactly. They're important. Just important for giving you averages. I think the 200-day is it's over 40 weeks, gives you a good idea, and the 50-day, is over 2.5 months. It gives you a good idea of not necessarily long term, but gives you an idea of potential direction of the market. The other, obviously, very important one for positional traders is support and resistance levels. And, these are important for traders of all types. But scalpers and day traders, they're more interested in short-term support and resistance. So they'll be looking, over the day or over a week. That's what they're going to be looking for. But position traders tend to be looking much more long-term support and resistance. They're looking for historic support and resistance. So you'd be looking to buy at historic support levels, or looking to sell at historic resistance levels. But they'll only do this if the fundamental analysis shows that there's going to be a definitive shift. So you've got to be careful, even with these historical trends, especially now in these crazy times that we live in. We're seeing markets do things that they haven't done for a very long time. So even with these historical support and resistance levels, you still have to be careful. What are the advantages of position trading? So it's a long-term strategy, and because it's long-term, and if you get it right, you can make a lot of money this way, with relatively little effort. If you hold on to something for a couple, 3 years, and you start at the beginning of a trend that continues for 2 or 3 years, then you're gonna come away with a very large profit at the end. There is less stress for the trader. It's a less stressful form of trading than scalping or day trading, because you don't need to be following your position every day. You don't have to be jumping in and out of markets. You don't care about the technical analysis so much, or small price movements. And because of this, there's more time to spend on other transactions. And so a lot of position traders that I know will, they're multi traders. So they'll hold long-term positions, and then they set a trailing stop loss, and then they can forget about it. They can just move on, and then they can engage in swing trading. They can engage in day trading. They can engage in their day jobs. It gives you a lot of time to do whatever else you want to do.
Yeah, absolutely. But then there are a few disadvantages as well. So the one thing is that a lot of capital is needed to keep your positions open, especially if you're leveraged and you are paying swap fees. You're going to have to have a lot of capital to keep your positions open, and obviously you need a large deposit then, because of the strong fluctuations that might happen in the trading day. You need to have a large enough position that you're not going to get stopped out. And then there's obviously some risk involved in day trading. Obviously, it's much lower than in positional trading, much lower than day trading or swing trading. But if a mistake is made, it will likely be quite a fatal mistake. And this is particularly true for traders who go against the trend, because they won't only lose their deposit, but they'll also lose the time invested, sitting in the wrong position. So there is a bit of risk, maybe less so than the scalpers and the day traders. But yeah, you still have to be aware that there are things that can go against you in the market.
Yeah, so scalpers and day traders, they build up lots of micro risk, throughout the trading day.
Yeah.
Lots of small risks. Whereas with a position trader, you're taking one very large risk. And as you said, if you get your fundamental analysis wrong, or you got the trend, your breakout was incorrect, and then the whole point with day trading is that you're going to sit there and you're going to wait, and you know that the price is going to move against you at some point. But if the price continues to move against you, and you've got this huge position that you're planning to hold for months, it can lead to very heavy losses. So the fundamental analysis is really important in day trading, making sure you got that right. So I think that covers it. Is there anything else we need to cover with position trading?
No, I think that pretty much does cover it. But if our viewers have any other questions for us, they're more than welcome to send them through to fxscouts.com or tradeforexsa.co.za, and we're very happy to answer any questions. And give us a thumbs up if you like our video, and sign up for our newsletter if you'd like to have current news on the different markets, or releases about our upcoming videos.
Yeah, great. All right, Alison, thanks so much. Speak to you soon.
Cheers, Chris.